welcome. You're watching The Money Show. I'm Kavita Thapliyal, and this show is one-stop destination for all your personal finance queries. This show is where we help you formulate your investment strategies, or we help you or guide you towards getting into the right kind of investment instruments which are directly aligned with your financial goals. And we have an expert every day on this show who not only helps you with different investment strategies but also answers your portfolio queries. Just in case you want to get your portfolio checked from any of our experts, you can send across your questions on our WhatsApp number and email ID that's flashing on the screen. If your existing investment, or you are someone who's just taking the first step towards your investment journey and need guidance from our expert, do tell us what's the exact amount that you want to invest, what's the kind of risk appetite that you have, so that our experts are able to guide you toward the right kind of investment instrument. So I have with me Pankaj Mathpal, who will be answering all your portfolio queries today. Pankaj, hi, good evening and welcome to the show. And the special focus of the show is not only questions of investment portfolio but also insurance that we'll be focusing on today. So let's begin, and let's take Shobhit's question first. He says that he's 36-year-old, starting investing in Parag Parikh Flexi Cap, Motilal Oswal Mid Cap, HDFC Small Cap, wants to invest for 15 years and target is 1 CR. Okay, that's all the information I have, and this is for the first time I think he has started investing.
Kavita, good evening, and thank you very much for having me on the show. See, so with has a 15 years investment horizon, so portfolio can be well diversified. 15,000 SIP for 15 years can help him accumulating around 71 lakh. So first thing, because his target is 1 crore, he should increase his investment by 7% every year. I mean, step up of 7% is required, but my suggestion, if possible, he can step up by 10% every year. And as far as schemes are concerned, say Parag Parikh Flexi Cap Fund is a good Flexi Cap Fund in this category, one of the best performing fund. Motilal Oswal Mid Cap Fund and HDFC Small Cap Fund. All the funds are one of the best in their category, so he can continue in these funds only. And allocation is also appropriate.
Karan says that who should consider investing in balance advantage funds, and how do they perform in comparison to large cap? Very interesting question, and I think it's not only Karan, Pankaj, all those investors who are, because the hybrid category is very much in demand, we know that. But then again, when you talk about giving consistency to your portfolio, when you're talking about giving stability to your portfolio, you cannot really miss a large cap category. So how can you decide among the two, or both of them are important? It depends upon your equity appetite that you want in your portfolio.
Yes, Kavita. Both are different categories and both can exist in your portfolio. It's not that one of these two. You can have both funds, one large cap, and along with that, you can also have one balance advantage fund. So when we talk about large cap fund, that is a pure equity fund where minimum 80% of the asset of that scheme will be invested in top 100 companies, means some companies out of top 100 by their market capitalization. So large cap fund is purely equity fund investing in large cap companies. And balance advantage fund is one kind of hybrid fund that invests in equity and debt, but the allocation between equity and debt can change from time to time based on the situation. Means, well, if the market is suitable for equity, fund managers can increase the allocation in equity, or if required, they can reduce the allocation in equity and increase in debt. If you are investing equity fund, it will be more volatile compared to a hybrid, but in long term, it has potential to deliver better returns compared to a hybrid fund. So if you are a investor who has a long investment horizon, and if you are comfortable with volatility in short term, then a large cap fund can be a better choice. But if you want moderate returns with a little lesser risk compared to a pure equity fund, then balance advantage fund can be a better choice.
All right, let's shift gears to insurance questions now. Very interesting queries, Pankaj. Let's take Kalyani's question, and she says that she's a single mother. age is 35 years and earns almost 50 lakhs per annum, and she doesn't have any corporate group insurance cover, and she wants to buy adequate health coverage for herself, and she also has a son. He's 10 years old, and she doesn't have any health issues, nor does the son. Okay, so very interesting question. Kalyani, thank you so much for sending us your query, because all those single mothers out there who want to get the insurance right, because that's the first step towards financial planning, and risk coverage protection is very important. I mean, I'm sure you must be having an investment strategy, but then since you're a single mother, covering yourself against all the financial liabilities and other responsibilities that you have on you, it is very important. So congratulations for that right step. Pankaj, what would you recommend?
Yes, Kavita rightly said. See, single mother and no corporate insurance, she must consider health insurance with adequate sum insured, and at least to start with, she can have 10 lakh sum insured for a floater policy which covers herself as well as her son. So 10 lakh, and if she can afford more premium and wants to increase, then super top up policy can be another choice, means along with this policy. So first start with the 10 lakh rupees sum insured, and Aditya Birla Active Health Platinum Enhanced Policy. This will be a good choice, which has like it gives 50% no claim bonus every year until your no claim bonus is equivalent to the sum insured. So if she goes for 10 lakh sum insured and she does not claim for next 2 years, her sum insured will increase to 20 lakh automatically without paying extra premium. So that is one good choice. Plus, there is also a refilling feature, means if she claims in 1 year total 10 lakh rupees, still she can get another 10 lakh rupees cover in that year. That facility is available with this policy. That feature is there. So I suggest that Aditya Birla Active Care plan will be a good choice for her. But Kavita, one more thing I want to add here, that obviously this policy is cashless policy, no sub limit, and all the features of the modern insurance policies are there. Plus, one more feature is there, that is basically if she is active and does some exercise in any form, so she gets rewards for that. And these are cash equivalent rewards for being healthy and being active. So these rewards points can be used for the for anything which is not covered under the policy. For example, for OPD cover or for some other health checkup, etc. She can use those reward points. So that is an additional feature of this policy. That is why I suggest this. And along with this, I think Kalyani should also cover a term insurance plan. Though this is not a part of question, but I'm suggesting, because she said that she is a single mother. So my suggestion that along with health insurance, she should also cover a term insurance plan for herself.
All right, very important. And Kalyani, do bounce back any other question that you have or any clarity that you want. We'll get it answered from Pankaj only. Pankaj, let's take Parth's question. Again, a very interesting question. He says that his parents are 70 plus, mother has diabetes, and father has blood pressure. Will they get health insurance cover? Also, he wants you to recommend health insurance that he can buy, and the coverage amount that he should be opting for. So very interesting. Senior citizen health insurance. Few insurance companies actually can be on the checklist for that, Pankaj, if I'm not wrong. And looking at the health history, it will not be very easy for him to get a desirable cover at a cheaper rate. I mean, he will have to really shell out a lot of money.
I agree with you, Kavita. And it's difficult, premium is high, but still, because he wants to buy health insurance for his parents, he can consider Aditya Birla Active Care Premium. It's the policy for senior citizens. So there are chances that despite of pre-existing disease, he may get this insurance policy for his parents. Ultimate decisions is in the hands of underwriters, but he can apply for this policy. This is a comprehensive health insurance plan, and cashless home treatment is also available. Along with that, 586 listed daycare treatments are also covered in this policy. But the existing disease may have a waiting period of 24 months, will have, rather I'll say 24-month waiting period, but at least other than this diabetes and hypertension, for other elements, his parents may get cover in this policy.
All right. All the best out there, and very important to think about insurance very earlier in the age. Pankaj, uh, can you give me the premium amount that they would have to pay now vis-a-vis if they bought the insurance policy in their 30s or 40s? How much the premium would have gone up?
Yeah. So at the age of 70, the premium, whether you talk about Aditya Birla Active Care or any policy which can cover senior citizens, will be something like 75,000 rupees to 1 lakh for a cover of 10 lakh. So it is very expensive. But if you buy at young age, as you said, 30 years of age, the premium may be something like 10,000 to 15,000 rupees. But one important point to understand here, when we talk about health insurance plans, health insurance policy, the premium does not remain same throughout your life. That is based on the age band. Say, for example, you're buying a policy at the age of 25. So from 25 to 35, the same premium will continue. From 35 to 45, premium band will be different. So even if you buy a health insurance policy at the age of 30, 35, when you are 70, 75, your premium will be high. Is not like the life insurance policy where the premiums remain same throughout the term. In health insurance, your premium keeps changing as the age progresses. So that is one thing very, very important to understand. But yes, for Parth, because you want to buy a policy for your parents, you must consider this plan for themselves. Rest, it depends on the underwriter whether they will be able to get it or won't.
Very important. Okay, next question is from Raju. Again, an insurance question. He says that he wants to buy life insurance, and he's asking whether he should be waiting for GST cut because the premiums will go down. And so, will that time be good to buy a life insurance policy? And he also wants some guidelines, things to keep in mind when you buy a life insurance for yourself.
Okay. So, Kavita, GST rates revisions have taken place from 22nd September. So, already means effective from 22nd September, there is no GST applicable on uh, life insurance or health insurance premium for individuals. So, if Raju wants to buy a plan, considering that GST will not be applicable, so that is now already taken effect. Second thing, the policy, what I can recommend is ICICI Pro I Protect Smart Plus or SDFC Click to Protect Supreme. Any of these policies can be considered, which has means good claim settlement ratio. These both the policies or both the companies. So that is my suggestion for Raju.
Okay. Uh, let's move towards an investment question. And this is again a very interesting question coming in from Anand. He wants to know your view to buy a Tata Tourism Fund. And again, a very interesting theme and a sector to have in your portfolio. But then we really have to understand what's the exposure like, Pankaj, and it's a passive strategy in this particular sector. But we also want to know that has this theme already played out, looking at the GST rationalization, how much of a more impact or benefit is left in terms of investments in a particular theme like this?
Kavita, Tata Tourism Fund, basically Tata Nifty India Tourism Index Fund, it's a passive fund, as you said. First thing, that if you talk about sectors or thematic funds, it's difficult, very difficult means to take decision, because right now after this rate cut in GST, consumption theme also looks good, healthcare looks good. So how many theme you can have in your portfolio? So, and as you rightly said, that tourism, this theme, This is a very narrow mandate. So I think that Anand should skip this theme particularly. First thing I'll suggest that any individual should stick to the diversified fund. Some 10-15% allocation can be in thematic fund, but that for that you have to have very good knowledge that which themes will be able to outperform the broader market. But I'm not very positive on tourism theme at this moment, and this being an index um, fund in this thematic category again means I'll not be very much positive on this. So my suggestion that Anand can skip this. But if he has a very well diversified portfolio where you have large cap, mid cap, small cap, everything, one fund I can suggest to Anand as well as other investors also who want to allocate some money in thematic. Like there is a thematic advantage fund, like ICICI Prudential Thematic Advantage Fund, where there are multiple themes, not one theme, but in one scheme there are multiple themes. So, and fund managers keeps changing these underlying themes from time to time. So that kind of thematic fund which has not one theme in the portfolio but multiple themes can be considered, but only one thematic fund and that too this tourism related will not be my advice.
All right, that's not going to be your advice. But then, what if someone really wants some kind of an exposure in this particular sector? Should you be looking at a diversified mutual fund, where you need to ensure that this theme is being added by the fund manager?
Exactly. See, as I said, first thing, in diversified fund, we know that all the sectors are there. So obviously, if not very concentrated, but in diversified form, you will get the benefit of these sectors as well, of the tourism sector. Second thing, as I mentioned earlier, that like ICICI Prudential Thematic Advantage Fund, that is one of this kind, where there are multiple themes and fund manager keeps changing the themes based on the situation. For example, right now, if we expect that consumption or banking sector will perform better, so you will find that banking sector and consumption will have higher weightage in that thematic fund. So having a thematic advantage fund will be a better choice than having a single theme in your portfolio.
Let's move on and let's take Radhika's question. And she says that I've invested in ICICI Pru Blue Chip, Parag Parikh Flexi Cap, HDFC Mid Cap Opportunities, and she wishes to add multi-asset to her portfolio. And which one should that be? And all of her investments are lump sums. So yeah, very interesting. She invests only in lump sum. I mean, I'm sure she has her reasons for that. But then lump sum versus SIP has always been a concern or a debate for investors. We'll talk about that later on the show. But then, yeah, adding a multi-asset allocation fund will be good at this particular stage of a portfolio.
Definitely, Kavita, because she has flexi cap in her portfolio, large cap, mid cap, everything, and having a multi-asset allocation fund can be a good choice. But let me explain that there are two types of multi-asset allocation funds right now. One of them will be where equity allocation will be more than 65%. And another types of multi-asset allocation funds are where equity allocation is maintained between 35% to 65%. And because Radhika has equity funds in her portfolio, so when she goes for a multi-asset allocation, my suggestion will be a fund which maintains equity allocation between 35 to 65%, not more than 65%, which will provide her better diversification. So one such fund is White Oak Capital Multi-Asset Allocation Fund. This fund maintains allocation in equity between 35% to 65% and more in debt and gold. So as she does not have gold in her portfolio, this fund will help her with a higher allocation in gold and debt. So multi-asset allocation is a good choice. And within that, I have suggested White Oak Capital Multi-Asset Allocation Fund, and the reason for this selection I have explained here.
All right, I think with that, it's time up on the show. Thank you so much for taking time out and helping our viewers with their portfolio queries. And for our viewers, I'm going to leave you with our WhatsApp number and email ID where you can send across your question and get your live financial planning done live on the show.